Most homeowners think their insurance covers everything. It doesn't. And these things that it doesn't cover, those are the things that bankrupt people. Today, I'm going to walk you through the biggest exclusions hiding inside your insurance policy. The things your policy will not pay for, no matter how much premium you've been paying. I'll be honest with you, some of these exclusions are going to surprise you because a lot of these exclusions involve the exact scenarios most people assume they're protected against. Again, I'm Frank Warren with Iron Legacy Insurance. Let's get into it. Let me walk you through the major ones and I'll explain why each one matters for Georgia homeowners specifically. Number one, flood damage. This is the big one. Your homeowner's insurance does not cover flooding, period. Not from a river, not from heavy rain, not from storm surge. If water comes in from outside your home, that is not covered on a standard homeowner's policy. You need a separate flood insurance policy for that. And in Georgia, with the storms we get, the amount of development happening in flood-prone areas, and the way FEMA keeps redrawing flood maps, this is something every homeowner needs to at least consider. Number two, earthquake damage. Now, Georgia isn't California, but we do have seismic activity, especially in the northern part of the state. Standard policies exclude earthquake damage entirely. If you want it, you need a separate endorsement or a standalone policy. Number three, sewer and water backup. Here's one that catches a lot of people off guard. If your sewer line backs up into your basement or your sump pump fails during heavy rain and water floods your lower level, that's not covered under a standard policy. You need a specific endorsement for sewer and water backup, and honestly, in my experience, it's one of the most common claims we see. The endorsement's usually very affordable. Most people don't have it. Number four, maintenance issues and gradual damage. Your home insurance is designed to cover sudden and accidental events. A tree falls on your roof, a pipe burst. It is not designed to cover things that happen slowly over time. So if your roof has been leaking for months and the water's been rotting out your attic, that's not a covered claim. That's a maintenance issue. Insurance companies expect you to maintain your home, and if damage happens because you didn't, they're going to deny it. Number five, mold. This one's complicated. Some policies cover mold if it's the result of a covered loss. Say a pipe bursts and mold grows before you can clean it up. But mold caused by humidity, poor ventilation, or ongoing leaks, that's almost always excluded. And even when mold is covered, there's usually a sublimit, meaning they'll only pay up to a certain amount. Number six, certain dog breeds. Some insurance carriers will exclude liability coverage for specific breeds they consider to be a high risk. Others won't write a policy at all if you own certain breeds. This can vary by carrier, so if you have a dog, any dog, it's something you need to be upfront about with your agent. Beyond the big exclusions, there are some gaps that are more subtle but just as dangerous. Home-based businesses, if you're running a business out of your home, even something small. Your homeowner's policy likely has very limited coverage for business property and zero coverage for business liability. If a client visits your home office and gets hurt, your homeowner's policy may not cover it. High-value items. Your personal property coverage has limits on certain categories. Jewelry, fine arts, firearms, collectibles. There are usually sub-limits of $1,000 to $2,500 per category. So if you have a $10,000 engagement ring and it's stolen, your standard policy might only pay $1,500. You would need a scheduled personal property endorsement, sometimes called a floater, to fully cover those items. Vacant homes. If your home is vacant for an extended period of time, typically 30 to 60 days, many policies will reduce or eliminate coverage entirely. This matters if you're in between tenants, doing renovations, or spending months away. There are specific vacancy endorsements that address this. And there is an important distinction to make between occupancy or unoccupancy and vacancy. They are different. Here's the thing. None of these exclusions are secrets. They're right there in your policy. The problem is that most people never read their policy, and a lot of agents don't walk their clients through these gaps. That's not how we operate at Iron Legacy. We believe you deserve to know exactly what you're covered for and exactly what you're not. Because you can't make a good decision about your coverage if you don't understand it. So here's what I'd recommend. Pull out your current homeowner's policy declarations page and start with the exclusions section. If you don't know how to read it, that's exactly what we covered in our next video, a line-by-line walkthrough of your declarations page. Watch that one next. And if you'd rather just have us do a full review of your current coverage, find the gaps, explain the risks, and show you what to do about them, you can book a free coverage review right now at the link below. I'm Frank Warren with Iron Legacy Insurance. We'll see you in the next one.